Thank you for watching Junior Mining Talks, support group for the 4%. My name is Antonio, and Luke Tenhaven and I today are talking about being a contrarian or being a victim. Luke, in one word, what makes a contrarian?
At the risk of repeating Rick Rule, as he is sort of the person talking about it all the time. Well, I think trying to be where other people are not, really not something that people perceive to be contrarian, really things that people do not want to touch right now, and then trying to find the right thing.
Before we start getting into the actual conversation here, though, I would like to warn everyone listening and watching that we have not received monetary compensation for the production of this video from anybody. However, you still need to understand that this channel is a business that sells content producing services to companies, which means you cannot rely on this video for research. Research is conducted by reading official company filings, which you can find on setterplus.ca. Please only watch this if you know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is a very tough business where failure is the norm and should be the expectation. This is going to be a conversation that is general and impersonal in nature, containing forward-looking statements. I am not a licensed financial advisor, neither is Luke. So before continuing on, please do talk to an investment advisor with a good long-term track record because your capital is at risk. And we are neither licensed financial advisors, nor do I personally have a good long-term track record. If you're not 100% sure you understand 100% of the disclaimers that I just showed on your screen, please go to the last section of this video and do not consume this content unless you fully understand and agreed with everything said herein. That all said, that's actually a good point, and I have prepared a bit of a rant here to that point because I think the way contrarianism is perceived is not necessarily what it is or what makes it work or what's made it work for Rick, for example, or other people who do it. But why would I want to be a contrarian in the first place?
Well, the answer is really simple, of course, because it is cyclical, this business. I mean, the stocks are cyclical. Everything is going up and down like crazy all the time, and I think it's really important to have a low entry. Let's just leave it like that for the moment.
So you want to be a contrarian because you want to get a low entry. That makes sense.
And
And
it makes
why?
it easier. It makes it way easier because you cannot predict a lot of events that will happen. But having a low entry into any kind of stock makes any problem later on a bit easier to deal with. Uh, I think you should only pay up if there's a very good reason to pay up.
I ask that because I kind of want to set the stage for this rant that I hear here, but I don't think that how most of us perceive contrarianism is necessarily the right approach. And all of it kind of stems from all my thoughts here kind of stem from the debate between top down versus bottom up. We've chewed on this a few times, but I basically no longer think that top down investing is the right way to do it in our space, or at least not for me. And a matter of fact, I think that top-down investing is what creates the so-called victims in this space. Although I don't think about them as victims. I think that it's the market doing its thing, and there's an over and an under. But victims makes it more dramatic, and that's good for the view counts on YouTube. But so the point is, I think that the way most of us think about being a contrarian is still being a top-down investor, at least for most of the insight that I read online. And again, there certainly are exceptions, and a few people do it well. So Rick Roll is one of them, and he's proof that it can be done. But in my sort of brief experience so far, most so-called contrarians aren't the rebels that they think they are. They're just market followers with sort of on the other market followers. Let me make this sound smarter than I am, but market followers with a -1 correlation, and sometimes they have a superiority complex. And so instead of buying the hype and buying things that go up just because they go up, they buy something that's down just because it's down, and then they cry about it, and then they flip before making money. And I would know because I've done it and lost money that way. So I'm making fun of myself here, but I thought I was being, Mr. Smart Pants, contrarian, until my pants got handed to me and I had to eat them with no ketchup and not even a little bit of mayo, which is almost a crime. But and anyways, I didn't lose money last year, which is an achievement for me. And most of my positions are in the green this year. in large part because of luck, but also I think important caveat. But I think it's also because I started doing everything bottom up. I actually wrote it down, and I might even put it on a T-shirt. But I started paying more attention to the rocks, the stocks, and the dollars. So essentially, what I'm talking about here is geology, share structure, as well as the financial position. So financial position and financing capabilities, really these three things. That's why I started paying very, very close attention to. And so, obviously, this is anecdotal data, and n equals one, with the one being me. There's biases, yada, yada, yada. But my point is that I think there's only one way to not be the victim in junior mining, speculating at least. And it's not contrarianism, but it's becoming niche and focused on just one thing, and not doing, gold producers and silver developers and uranium explorers and lithium royalties and nickel prospect generators and trading physical tungsten and everything else at the same time. But it's sort of finding a corner of the space that makes sense to you, preferably one where the bias is up and to the right instead of the kangaroo formation, and then sticking to it, going niche on it. And I guess here's what I'll take the most heat for, but not caring about what the broad markets and commodity prices are doing. Again, with the caveat that you're in something where the bias is up and to the right. And so I'm not saying don't be a contrarian. I'm saying that being a contrarian to the market is not a foolproof strategy. What might be, well, not a foolproof strategy, but a decent strategy is being a contrarian to the noise that surrounds the market, if that makes sense. And whatever it might be, YouTube headlines that say that gold is going to $10,000 per square inch or something like that because for the formation of the moon, or COCA telling you that the stock will hit a dollar next week on the Met results, or Twitter telling you that some geopolitical insight is going to turn the world around, which is as valuable as used newspaper, or stuff like that, right? Where breakthrough battery technologies and all, I can keep going really, but all these people talking macro and talking about these things, sometimes I wonder how many of them actually make money. If you look at sort of their 10 or 20 year track record, even, did they really make money? And how many of these years did they really make money on in the market, not selling what they're selling? And maybe that's a list idea for you right there, Luke, by the way. But and again, this is for myself. It's not advice. It's basically a support group for tired gingers. But the few people who I know make money in this space and have been making money for a while now, they pick a small sector, they pick a segment of that small sector, and then pick a corner of that segment, and then they obsess over knowing every detail of it and every person in it. Like it's literally the type of people who would look something up on Google Earth to see if the drill is actually where the company told them that it is. They track a handful of companies obsessively, but they only own a percentage of that handful. And then they ignore, well, like, as we're about to see, it's a very specific number, but they ignore 96% of that noise, of the noise that doesn't matter to their process. So it's like, they don't try to be smarter than everyone else by doing the opposite. They don't try to be the smartest sheep in the herd and go the other way. So if the herd's going that way, they go the other way. They try not to be a sheep in the first place. They just don't follow from either or in either direction, which I think is real contrarianism. So it's not that contrarianism doesn't work in and of itself. It's that I think it's near impossible, judging by the number of people doing it well, which is to say not very many. It's near impossible to do it well. And it's not just blindly doing the opposite. That's basically it. And I'm ranting at this point, I know, but it's in my sample size is one over a period of which I've not tested this long enough, is what I'm trying to say. So this is more of a gut feeling than anything else. And nobody should take this at face value, but those are my current thoughts, if that makes sense. And I basically want to see what you and others think about it. So yeah, shutting up now. What do you think? Am I making any sense here?
Yeah, well, I've made up a couple of notes because listening to it, I mean, of course, we have both been thinking about this topic before the episode, and while you're talking about it, I think some new things came up, realizing what I think is a good contrarian. And my answer wasn't really the best one. I think one of the proper answers I think I should have gave in the beginning is when it's very boring. When boring is high and emotion is low. So when a stock is really crashing, for example, lithium in 2023, to then buy lithium because everybody's selling it's not a smart idea, I think, in most cases. I mean, there's never an always. I mean, there's always an exception to the rule. But I think the more boring it is, of course, it needs to be good as well. So let's just discuss the quality a little bit later. But in general, I think if it's very boring, when nobody talks about it, not to the downside, not to the upside. So the thing is not crashing, the thing is not going up. Whatever you're looking at is going sideways. It's extremely boring, and nobody really talks about it. I think that's sort of the ideal contrarian situation. And if something happens like lithium crashing or any other commodity or a stock is crashing for whatever reason, and you think, well, this could potentially lead to a good buying opportunity, it could be. I think ideally in a contrarian situation, your emotions are very low. So not like there's good news, I want to get in, and your heart almost starts beating like I have to be quick at the open. Or when things falling down because of a bad event, and you think, oh, I have to be fast because I want to be involved in this thing when it comes down, and I have to be very, alert to pick the right moment to buy it. I think those things are way more difficult. I think it's way easier when the stock already crashed 2 years ago but didn't really recover from it. Sort of found a bottom, became very sort of sideways trading. You have the time to call the company, find out what they think, why do they own it, do they own it in the first place, and you have all the time. And once you really spend some good time thinking about whatever you're trying to buy, and you come to the conclusion, I want to start buying this stock as well. And you have all the time because it's going sideways. The problem is often liquidity. There's not a lot of selling, so you just play the place a bit, and over a period of days, weeks, or months, you get your position. Even with small positions, sometimes the tiny stocks, like the sub $5 million market caps, even for smaller entries, can take a bit of time before you get your full position, even if the position is $20,000, because sometimes that is not the liquidity available on a daily basis. So I think from a contrarian point of view, the risk is lower, of course, when you do proper work, due diligence. But when nobody talks about it, it's not going down. There's not much going. It's not going up. It's just going sideways-ish. So I think that would be a better place to be. Emotion low, volatility low, emotion boring high. So it should be a sort of a boring situation. And I have found out that a lot of people really admit, like, well, so waiting like you do, like 2 or 3 years before something starts finally playing out, I couldn't do it. But I think that already gives you the opportunity. If almost no one else likes that situation, then that's an opportunity in itself. And the few people that actually realize and can do it, like buy something and wait for a very long time, being in a very boring stock, they have also 1,500 stocks to pick from, and it's not necessarily likely that they are looking for the same thing as you. So you really are in a competitive advantage as being one of the few people looking to a stock in that specific boring situation.
Then you're talking about being a contrarian on a specific niche situation. So you're essentially agreeing with what I said before. Do you have to go, small sector, subsector, subsegment of the sector, corner of that segment? So very niche, a special situation. Now I sound like the guy from the Wolf of Wall Street, but another brilliant idea, another special situation. And so that's exactly what you're talking about here. But at the same time, I think when most people think, oh, contrarian, they think uranium is $20. Everyone hates it. No one wants to build nuclear power plants. I'm going to go and be contrarian to that. And I wonder where you draw the line with that. I mean, do you go long asbestos right now? Because everyone hates asbestos. Nobody wants to touch. So do you go long that just to be a contrarian? That's kind of what I was thinking with my rant.
You have to have a competitive advantage. And I think if you have if for some reason a metal or mineral that you don't know anything about interests you, and you really have the time to spend time to understand that mineral, and you get comfort after doing your work, of course you can still buy this odd mineral. But I think there's plenty of opportunity in gold and silver and copper and all kinds of other metals. That's a personal decision, not really something good or bad, I think. But I'm not often playing the Rick Rule theme, like, hey, uranium is at this price. I think because of macro reasons that uranium will go up, and let me just look at the best uranium companies in that space. I think Rick Rule's talk is always, go for the real ones, not for the 50 or 60 companies in a bad market that still claim to have uranium but don't really have uranium. I mean, I think it's good advice, but I'm not really someone looking to a metal and then start looking for a company. I find a company through different methods, and if I find that company and the metal works for me, then that works. Like nickel sulfides, for example. In general, I'm interested in nickel sulfides already for many years. It's a bad market right now, and so maybe I don't really. I mean, it works in both ways right now. Nickel is out of favor. These companies are out of favor. I know a little bit about those type of companies, so I have a little bit of an edge there, I think, combined with looking for good companies.
But you were up on a nickel position last year
Yeah.
because of a discovery. So at the same time, you're still kind of making the point for and Tom's going to like this, but Geo Alpha, right? Because a discovery helping you make money on something where like the vast majority of people didn't make money on. And even though the metal didn't go up last year, I believe it actually
Well,
went
I
down
think you are referring, I'm not completely sure. I think you are referring to Nikan.
SRQ actually, and
Okay.
fair disclaimer, not as confession, we're both long that, if I believe.
Well, I mean, both stocks, I mean, Nikan didn't really have a new discovery, but they did drill a very high grade intercept. That wasn't the reason that I bought the stock. The reason was really, I mean, I'm not going to talk about it too much because we are not going to talk Nikan today necessarily, but a management team that cares. I mean, that is already a big difference. Most companies, have people running it that have 5 other things, and they don't think about it on a daily basis. I think the management cares about it. They buy stock in the market. They think about share structure, trying not to give away shares. I mean, sometimes you almost have to if the market is so bad, but they try to really minimize dilution where possible. I mean, they think about how can we get this thing through a bad cycle into a better market, doing the right thing at the right time. So they care. And I thought about, the different things they want to do to add value to the company. I like the idea. I bought it for a long-term reason, but then the stock spiked a little bit too much. So I sold part of my position during that spike to 18 cents. And I bought it back recently, like a couple of months ago again. Because I think it's a company that cares, and it's not like the number one nickel play. So if you really believe in the nickel thesis, then Nikan is not the first thing you should think about, but it should still do well if nickel comes back. But it's not. There's better nickel. Well, there's better nickel plays from a point of view that companies already have a big inventory of nickel, and so that was the reason on Nikan. And SRQ is also a very specific situation, way higher risk even, because they are looking for something. They have no nickel. Well, they have a bit of nickel, but they are really an even earlier stage exploration company.
Yes, that is for the risk lovers, which we know it's actually almost too expensive for me. I wish it was sub 1 million market cap, and I'm kidding, of course, but only slightly. But what you're going to is what I said, rock stock dollars. Maybe it should be rock paper stock. I'm going to put that on a t-shirt one day for real, and I have it on record now so people don't steal it. But the where does that come from? I wonder, like, why is being a contrarian so popular? I mean, is it really kind of an inherent desire to be different? Because I think that's kind of what hurt me in the market. Because if the core of contrarianism is kind of going against sentiment, that's easy enough for me to understand even. But again, my IQ runs into problems pretty quickly after that, because how do I track sentiment? How do I quantify it? I can rock paper stock. I can quantify most of that, although there's qualitative parts of it as well. But how do I quantify sentiment? Because if being a contrarian is going against the sentiment, how do I put that in a spreadsheet? Essentially, is what I'm wondering here.
I think it's very easy. I think it's not popular. I mean, it's popular. Being a contrarian is popular to talk about it. I mean, Rick Rule mentions it every time, in almost every interview he talks about it. And I think everybody would say yes, fully agreed. And after the interview, they go away and they buy, something that's completely different. So I think I think if you would ask Rick, like top 5 rules as a speculator, this would certainly be in the top 5, being a contrarian. And there's a couple of other very logical ones.
Hmm.
So I think it's popular to talk about it. It's not very popular to be one, because I think a lot of people will admit, if you really keep questioning them, like, can you really be in a boring company for 3 or 4 years? It's in a way difficult, because you get so much information through social media, through the news every day that you follow,
Hmm.
by just following this industry, and you see companies with amazing results, and you rather be part of that winner than being part of this boring thing that nobody talks about and is only going sideways. And in the meantime, you see gold going up, and you see the gold producers doing well, and maybe you see lithium doing well for a while, and you're sitting there with your boring position, not doing anything.
Hmm.
It's kind of difficult. And one day can completely change your portfolio and make up for everything that you missed. And that's the benefit of being in these boring stocks, because if it's a good company, well run, with a good plan, it just needs some time, then often you get a very good day on a day you didn't expect.
Hmm.
Recently, I had a company that was, I almost, well, I didn't forget about it, but there's just no reason to really look at it other than once a quarter when they do a quarterly update. And suddenly, bang, they had news and the thing kicked off. And that's, I think, the benefit of being in these sort of boring stocks, where you know why you own it. It's not just because it's cheap or $1 million. You know why you own it, but you don't know when it's going to happen. It's just more of a question of when versus if. And
Hmm.
that makes it sound very easy. It's, of course, there's never a certainty that it's going to work out, but the ones that you have high confidence in, and you have to wait. I often wait a very long time in front of a move, but once a company really gets going with it, I typically take a bit of profit if it goes up a couple of times, because you see so many stocks that go up 5x and give it all back again. And I didn't do that last year with SRQ, unfortunately. I bought it at 9 cents, went to 40 cents, and didn't sell a share. And now they are doing a financing at 12 cents. But
Hmm.
I make mistakes. And I think it's important to admit that you make mistakes, because everyone who presents himself as an amazing investor, and it sounds like the person never makes a mistake, I think that's not true.
100% agree with that last part. And I think it's also good that we've gone that direction of essentially what I talked about before was that when Rick says be contrarian, when Rick is a contrarian, he's not talking about buying asbestos right now just because nobody wants to buy it. He talks about, in my opinion, the way he does it, he does what you just explained there. So is there a real asset? Is there a real business opportunity that's being mispriced due to temporary sentiment, essentially? And then the other stuff matter. Rock, paper, stock, right? They do matter. Like, are insiders buying? Is there a path to re-rating? Do they know what they're doing? Does it make sense bottom up? So again, I thought kind of the mistake here comes from thinking that you just buy whatever's hated right now. Lithium's hated right now. You just buy whatever lithium junior you can find out there without thinking, oh, is there a real asset? Is there a real project? Rock, stock, what did I say? Rock, paper, stock. Does that check out? And so I think that is a good point. But to a point where you said here is like sitting on your hands for a long period of time, essentially. What's the difference between being early and being wrong is what I'm thinking about. Let's maybe rephrase the question, but how do I know in real time if I'm being wrong or just being early?
Yeah, this discussion happens so often, where the discussion is project versus management team.
Hmm.
And if you find a company where something went wrong, but they do have the right management team, and of course you can discuss the right management team for an hour. But if you, based on your criteria, think this is the right team, um, then that alone can already be the opportunity. Sometimes it's simply the team. Sometimes it is because, and this is a risky one, but because a permit was withdrawn, or there's a
Hmm.
permitting issue. I don't like those, because you are in the hands of the authorities, and you never know how long that takes. But sometimes that works. Look at Trilogy, for example. Then you have situations of civil unrest, or you have a metal theme, like I mean, you really like a nickel project and you like the team, but it's just a bad market for nickel. Well, that could be a situation. So there's many situations where you also want to have a backup plan. So what if the thing that went wrong is not going to be solved? Sometimes the valuation is such that you think, well, with the management team's insider position, and knowing what they paid for it, because you can see it on CDI and in the prospectus. I mean, for them it's important and it's their main job, and they are good enough and they have enough of a network to find a new project if the other thing is not going to work. But what would happen to the stock if that project is not going to work and they have to look for something else? Is that going to be a 50% down move, or is that just already priced in? If it's already priced in, again, it's you don't know what the catalyst is going to be. Is it going to be that permit that they finally get, or is it the new project that they are looking for, or is it whatever reason? So I always think about, of course, what if what I'm expecting is not going to happen? Would it then be game over, or would there be another alternative? I almost always want another alternative. If I'm completely depending on somebody giving a permit, and if not, I'm going to lose 60%. That's typically not what I want to do. But if situation has changed, I mean, civil unrest or something, project amazing, not sure when or if they will get the project back, but if not, it's trading at $6 million. It has $1 million cash left, and the insiders are loaded up and have no side jobs. Well, that could be a scenario where you think, oh, at $6 million, I'm willing to start buying, and if it goes to $4 million, well, I'm happy to buy more. So I think you have to work with scenarios, and if you are, the more comfortable you are, the more relaxed you are, and you know what you're doing, you know what the risks are, and I think that's the best case. It has to be sort of boring, because the higher in emotions you are, the more you make decisions based on intuition, and ideally you can think about it for a week, another week, and nothing has changed. You can just decide like, this is still a good decision, so I may even want to buy more or place a bit lower.
I think it essentially comes to three things from what you're saying here. So it's essentially it's either unknown, like literally nobody knows about this company, not many people know about this company, which happens a lot with the stuff that you actually find. You like these kind of obscure stuff. So it's either unknown, or second thing that it could be, it's misunderstood. So it is fundamentally sound, but it's kind of abandoned for the wrong reasons, because maybe the geology is complicated. No one gets it. You have that geology edge or whatever. If you're a geologist, you get it. Or the third thing that it could be is timing. I mean, unpopular due to timing, essentially. So it could be politics, green energy, and it's a coal stock or whatever it might be. So it's those three things. But you have to ask yourself: is it fundamentally sound? Was it rightfully abandoned as opposed to it being understood? And does it have terminal flaws for this day and age? Essentially, that's the three things that I wrote down as you were talking. Have you done it? I mean, have you ever had a moment where it's like, I'm going to be contrarian on this thing, but it was really just a coping mechanism for being wrong?
Well, I can think of situations where I was a bit too early in buying, where I felt like the bottom was found and it fell a bit lower. But typically, the mistake, if I think about mistakes, and I make still a lot of mistakes. I mean, sometimes I really get frustrated about making a mistake that I should, after so many years, shouldn't have made anymore. But almost all these mistakes are in the moment of the decision. Like, some news comes out, and I think, well, this is important, and I'm fairly good at judging that and make wins every now and then based on the decision at the open. But those are riskier, and that's where most of my mistakes are. Also in selling, I'm not as good in selling, and maybe becoming nervous for the wrong reason and selling too early or something. But buying these sort of, like I say, boring stocks, and there's many companies around that classify it like that, and many of them I don't like. But those ones, I'm often doing well because I have thought about it so well, and they have found a valuation that is, in my opinion, so low, that I shouldn't say you can almost not go wrong, because you can always go wrong in this industry. But I cannot think right now of many examples where I was completely wrong with one of these. But sometimes very early, sometimes 2 years early. But sometimes you get lucky, but not often you get lucky that you buy something for this reason and within 2 months. I mean, Niken was an example that I bought in October 2023. I was buying it probably over a period of 2 months, and then in February 2024, it spiked, in my opinion, for the wrong reason. This was not. I wanted to be in a stock that was well managed, had a long-term plan, had 2 projects, and I liked the idea of being part of it. It's not like a fundamental company in the sense that they have a project that is, in my mind, worth $1 billion. It's just misrepresented. That's not what Niken is. It's still exploration risk. I just felt like the complete set of projects, team, everything together, at that market cap, $2.5 million or something, 2-3 million, was just a good opportunity, and it spiked for. Well, it was one of the reasons I wrote down as being a potential catalyst, but I felt like it shouldn't be because they were going to drill a deposit that everybody knows is there, or everybody should know. And they drilled a couple of holes, and one of them tested, I think, the guts of the system, or at least one of the better holes that was drilled to see if it would confirm all old showings. And I don't think it was a promotional technique, to be frank. I think the company didn't even expect the spike themselves. In most cases, if you're a little bit skeptical, you would say for sure it's the company's purpose of doing it. I don't think it was, but they drilled a really nice intercept. But I realized this intercept was not a new discovery. It was just a test of this deposit in a different direction. And they are drilling riskier targets too. So for that, the company was going 4 or 5x in almost a day or two, and it was a bit too much. And that's when I realized this is a bit too much. So I sold. SRQ was also too much. For some reason, I felt it wasn't, and I didn't sell. If you take 2 nickel examples together, I mean, in hindsight, it was a really easy one to just sell at 35 or 40 cents after buying it at 9 cents a day or two before on the news release. So
I think what I'm writing down here and listening to what you're saying here is that contrarianism is more dangerous at the macro level, but if your rock paper stock process checks out, it's a necessity at the micro level, if that makes sense. So you almost have to do it at the micro level. So on a per company basis, whereas the macro level, it's dangerous to do the exact opposite of what the crowd does oftentimes. But that makes me think if it's really possible to be a true contrarian in today's day and age, where it's social media, like 24/7 news cycle, or whatever it might be. Everyone who's got an opinion has an audience right now and is considered some sort of an expert influencer, or whatever it might have been, or whatever it might be called. So, and that's why I like about the exploration space is that you can actually do it. Like you keep doing it consistently, where you find these niche things that just no one knows about. And as I said, I mean, is it unknown? Is it misunderstood, or is the timing bad? And how many spots of the market do you really have where you can find something that's still unknown? I think not many. And
I was just counting them very quickly. I think I have about 18 stocks out of 34, and of course, not all 34 are big positions, but 18 stocks out of 34 that I think most people don't know about. So that shows that my portfolio is pretty heavily weighted in not very well known names.
So, well, I think you own too many stocks, by the way.
Well, it's 30. I mean, some of these 34 are not meaningful. They were spin-outs, for example, of the company I owned, and some of them. So I think I have 20 positions that I think about, like on a very more or less 20.
Okay.
That are important to me.
Well, and you do this full time, right? So that might change things. I think I have about half of that. Anyways, that's maybe a discussion in and of itself that we can do. But yeah, so what it comes down to is that it's not. You can be a contrarian bottom up. That's what I'm getting here from you. And sometimes you have to. But going back to when are you wrong and when are you really a contrarian? You know, what's the difference between being early and being wrong, essentially? When do you get out, or when do you give up? Really, like is it every time it's just company specific because it's bottom up, or is it some sort of a rule that you follow where it's like, oh, if nothing has happened 2 years from now, I'm going to give up? Because it's sometimes, well, sitting on your hands, you have the opportunity cost, which is obvious, but then you also have the dilution cost, because these companies, you have to run them. I think the cheapest you can run them for is like $500,000, is $600,000 a year, which is a lot of money. And people, well, the companies still have to raise it, right? Which is going to result in a dilution, and especially if it's like a $1 million, $2 million market cap company, which it oftentimes is with these misunderstood or unknown names, that can be a lot of dilution. If you end up holding it for 5 years, then your position is, well, you're going to be down a lot. And so when do you know to give up?
I think it doesn't have to be a $1 or $2 million company, by the way. There's also companies of 10, 20 million that are completely overlooked. I think Trilogy, I didn't buy it because I was in enough permitting risk place, but Trilogy was one amazing project, problem with the road and to get a road permitted. And that's why the stock was down to 60 cents for a long time until Trump was elected again. But when to give up was your question.
Yeah.
On these things, I do not often give up because so much went already wrong that there is not. I mean, there's nothing really. That's also the benefit of these things. There's not so much that can disappoint anymore. I mean, when nothing can disappoint, then the only thing left is a surprise, right? And of course, there's still always something that can disappoint, but at some point, I mean, I almost have to go into examples, otherwise I will keep repeating myself. But at some point, the valuation compared to almost anything is just low in this sector. And I always think about dilution too. I mean, ideally, that company still has cash left. Almadex is an example that it is not even a big position for me, but for several reasons. But that would be a good example. I'm not buying it as a big position, but it is a good example because they have $14 million in cash, about 19 million if you include a loan that they should get back. They have all kinds of porphyry projects that they are sort of assembling. They have a lot of experience in Mexico, left Mexico because of problems over there, and now focus on the US. How much can go wrong with a company trading at $10 million with $19 million in liquid. Well, the loan is not liquid right now, but $12 million or something in cash, or $14 million in cash and $6 million in loan. So about $20 million in value outside of the projects. And maybe you would qualify the projects as liabilities, but this is not a team that has high insider ownership. It's one of the reasons it's not a big position for me. And it's not a team that, I think gets a lot of people to appreciate the work they do. I mean, they just sort of scientifically move on, but don't really tell the story to the market very often. That's another thing. And I don't really like them issuing options below their cash level. So I think if you have $20 million in cash, you should not issue options below the 20 million market cap level, because then you really, in a way, tell the market that this is a fair value. I think options is already something that's debatable versus investors not getting warrants and things. But then giving yourself options at 11, 12, or at 18, 19 cents, whatever they give themselves options, that's not something I love. But it is an example that is sort of not appreciated. It was appreciated last week for some reason, maybe a newsletter writer, or maybe because they are working on a claim against the Mexican government, or maybe because they're drilling, I'm not sure. But it did have a bit of a spike last week or the week before. But it was really boring for a long time and cheap, I think.
I do want to go into the examples that you've sent me. I actually had a quick look, and there's a couple of interesting ones in there. But just kind of summarizing what we've said so far today, it's pick a niche, but again, a niche of the niche of the niche, and obsess over it. Know it better than everyone else. Rock paper stock. So understand the proposition better than everyone else on at least these three levels, but preferably on all the other levels and all the other things that matter. And buy it early. Buy it when no one else wants to buy it. Essentially, that's what I'm getting out of the summary. And also at the end, go to a shrink so that you learn how to deal with being bullied, or hopefully go to a good shrink, which is hopefully going to help you get out of the sector once and for all. But no, jokes aside, let's do that. That's my summary of it. But let's do the examples that you have here with you. You have a couple of ones. I don't know where to start. Where do you want to start?
I think let's start with one that already works. And again, I was not really in this one, even though I had identified it already quite early. This is Highlander Silver. Richard Workplay. I think it became known that he was involved in 2021 or 2021. Then Ron Stewart became the CEO. They were trying to buy the Hercules project that ultimately became the discovery by Hercules Silver, but they terminated that deal. Work showed up. Stock was halted and then opened at 30 cents. Market cap 21 million. At the time, I didn't really like the number of warrants. They had like 16 million warrants or something. Then it took 2 years for the thing to trade sideways. And I owned it. And actually, well, if you talk about giving up on one, I gave up on this one, but it was a small position for me. And then when the Lundins entered in 2023, it was not in the title, so people didn't immediately take note. It was available at 25 cents or 15, 16 cents, I think, pre-consolidation for a while. And there was all the opportunity to buy the stock. And then new CEO came in. Lundin family again participated, Sprott participated, Warwick participated, bought a new project, and the stock went from yeah, well, you couldn't have entered that thing really at 15, 20 cents, including the rollback, but 25, 30 cents should have been quite easy, and at least 40 cents. So there was a long time period of buying a Richard Warwick play. But I think there was also a bit of uncertainty in terms of CEOs leaving. There were 3 CEOs in a short period of time, so there was not really a lot of leadership, it seemed. So that's one that you could have identified. I didn't really do well on this one, which maybe is a mistake, but this is, I think, a good example of one you could identify. You have enough time. The thing was going sideways for a long time, and you could have built a big position and profit off it.
That's literally the only chart that goes up and to the right, though.
Well, this is the one that already played out. This is just one example of one that I didn't really appreciate enough at the time, but one that was available. All the other examples are ones that I think are right now. I just screened for companies trading close to their 1-year low, and that's why I have all the other examples without a price move, because they are ones that could be opportunities. I'm not recommending these things. These are examples that I like as a screener. So I like them. Some of them I own, but I do not recommend to buy all these things. These are just ideas.
Yeah, this is a support group for the 4%, which is the 4% is, you tell it. You actually came. Well, you didn't come up with it. What you kind of did. You tell it.
Well, there's 2 things, I guess. I mean, one thing is that Rick Rule also always says, hang out with the 4%. And he then explains the complete thing about Pareto's law, the 80-20 rule, where 20% of the population generates 80% of the utility. And if you do that once again, then you end up with 4%. 4% of the people generating 64% of the utility. And if you look at that same overview that I made of all the different stocks, 1,500 right now, and you look at that 4% of the stocks, it is indeed all the companies in the last 3 years that went up 600% or more. So really the successful ones over the last 3 years are in this 4%. And of course, you can make it 6%. And of course, it's a bit of an easy thing to say right now, but I looked at the list of companies and felt like, okay, which companies would Rick buy because of his connection? I think he talks to, his old buddies in terms of NGX, so he has a long-term relation with the Lundins. Then you have Highlander Silver, we just mentioned this, Richard Warwick. Corex Copper, which is, Hayadon. Then you have, Collective Mining. They have done it before with CNL. What is it again? Not Collective, also with a C. I mean, they had a successful play in Colombia before.
Collective.
Yeah, Collective right now, but before Collective, it was I forgot the name. Anyways, people can look it up. Ari Sussman did a big project and a big sale of $2 billion before in Colombia. Sold it for $2 billion to Sejin. Company also is with a C, but I forgot the name. Anyways, I think these are names, people that have done it before, that are still in the same environment.
Well, hang on, because now you've piqued my interest. Was it Continental?
Yeah, Continental. Yeah.
Okay.
So A-Mark is Bob Dickinson, which I'm sure Rick knows from the old days. So I think if you look at the bigger names in the sector and you hang around with them, these are just like 10, 15 names here on my slide that show up in the best performance over the last 3 years. And so I think it sort of proves that if you hang around with the 4%, you also will be with a couple of companies in the 4% of the best performers. Of course, there's many companies that spiked, but on purpose, I took the 3-year performance chart so that you have a little bit less of things that just spiked a month ago and is about to return, but still trades at a higher level. So that's the Pareto's law thing. And the other slide, the gray one that I also sent to you, this is really to show that statistically most companies are not doing so well. There's a couple of them, of course, that do very well, But if you look at the 1,500 companies, and this is versus the 1-year low, and the nice thing is you always look at red charts because all these miners are in the red. If you just compare them to the low, they will not go below the low because so the minimum they can do is 0%. And you can see that a lot of companies still trade, almost half of them, within 50% of their low price. So if a company has a low at 3 cents or 5 cents, it's still trading at 4 cents or 6 cents. And there's only a few companies, 300 of them, that are up more than 100% from the low. And the low is really the bottom price. So it even is a bit different than just taking a 1-year price chart. So I think it shows that most companies do not do well. Selective ones do well, and that's why you need to do stock picking.
And that's your bottom up. That's actually full circle. I thought I should just buy the stocks that had gone down. I mean, if something's gone down 99%, surely I should just buy it and not care about anything else.
Well, I think you have to screen that right-hand side of the page, like the company's not doing well, for opportunities. And of course, then it's important not to just buy something that went down, but to buy something that went down for reasons you understand and for reasons that you think can be solved. And I like these companies because IPOs, in my experience, there are certainly exceptions, do not do so well typically, because they get set up with a big story. We go, online, we tell everybody our story, we get some investors in, we get money in. The seed round is just a year or 2 years behind us. And now we're going live with this big deal. And sometimes it works out. Newfound Gold started really well, and Solaris started really well. But a lot of these new companies fail because they start in a good market, the bad market shows up very quickly, and the things goes down. And companies that already had a bit of time in the market, had time to settle, and people sold whatever they wanted to sell, and found a sort of a base. That's where you find still good groups at multi-year lows. Where you have that opportunity to buy it, like Highlander was apparently an opportunity a couple of years ago. And I think there are Highlanders right now in this right-hand side of the chart, the 700-800 companies on the right-hand side that are very close to the 1-year low. And you may still have a year left to buy these things. But I think, so looking for these opportunities is, I think, the fun part of speculating. And that's why we will discuss a number of those.
Do you have an example where it went wrong too? I mean, it seems like all of them went wrong if you held them for too long, but yeah, what is an example where it went wrong?
Well, do you mean went wrong in the case of this gray chart of companies not doing well?
Yeah, so essentially companies that I know you don't have that example here, but it's what I'm thinking about here is what percentage of the companies that are on the right hand side of that gray chart here, what percentage of them never did anything? And the answer is probably, I'm guessing, but it's probably most of them.
Well, I think most companies at least had a spike at some point, because every company goes online, gets an IPO at some point, or has a new project or whatever. So you see many spikes, and often these spikes are short-lived. There's not many companies who can really build a share price that keeps on going. Of course, with corrections, but really has a trajectory to the right upper side. And of course, you want to look for these things that will do that in the future. So there's almost, in terms of percentage, of course, not many companies, less than 10%, I guess, that really had a long-term. And sometimes that's where the opportunity is. A company that has been very strong in the past, but for some reason came back down, and especially if there was a lot of work done, but the work had to be terminated because of whatever situation. So that could be, and Belo Sun could be one. Belo Sun was invested by Agnico Eagle. They have a project in Brazil. I don't know a lot about it, but they have a high-grade project in Brazil. They have a deposit, spent a lot of money on it, got a permitting problem. La Mancha recently went in, and the stock reacted. So sometimes they need a catalyst like that to make it work. And I think in that case, it was lower risk to buy it post La Mancha than pre La Mancha, because I would not have picked that one, to be honest. So there are still La Mancha, still Belo Sun type stocks in here. Maybe Eurosun is one. Again, this is also a tricky one. Also permitting situation, and you really would have to dive into that situation. You have to be comfortable with the team, but they have a very big project in Romania, gold, copper, and with Europe turning favorably towards metals right now, and luckily being a bit of copper in the deposit, that one may have an opportunity, has a chance maybe. But I don't know enough about it. I'm not recommending it. It's again an idea, but that could be one that completely failed, but could get another day in the sun again.
You do have Alpha Min Resources on here, which is, I think, the largest cap company that you have on here that recently had what a 50% drop or something along the lines. Why do you have this as an example?
Well, this is one that I'm typically not tempted to buy because it's sharp spike down, and I don't really have the time to uh, make myself familiar. I don't own the company. I never talked to the company, and to have the comfort to buy it here in taking advantage of the bad situation in the Congo right now, with these rebels advancing and them seizing the operation. You have to know what you're doing, and this is, I think, what I said in the beginning. I don't really like the emotional things because buying right now would probably make me worried about, well, is this the bottom? Why is this market cap reasonable for this situation? So if this thing spikes up, I don't mind not being in it. But if this thing will go further south and the situation becomes more problematic, maybe 2 years from now, when this, I mean, I'm not suggesting this company will stay down. Maybe it will recover, and maybe international support can help to get this country in a better spot again, and Alpha Min corrects and gets back to the old market cap and share price. That could be an outcome. But if the outcome is worse and the situation in the country remains bad for another 2 years, that's when I will probably start looking like, hey, now I have time to talk to the company. What are the odds of Congo improving? What are the odds of them getting it back again? So it could be a situation a year from now, if it's still not solved, for me to start looking at it. So for me, this is not an opportunity because I don't know enough about the company to take advantage of this potential opportunity. I think that's exactly what we are trying to discuss today. Is like, you can feel like a contrarian buying right now, but only if you really know what you're doing. And of course, nobody can exactly know what will happen in Congo. But if you know enough about the country and the company, you can make an educated decision. I cannot do that. So I will leave this thing completely. And if something happens like I just described, then I may look at it a year from now.
I don't know it well enough to have an opinion on this specific situation either. I am thinking about the framework of how to approach it, though, had I wanted to do it. I don't, that's not typically a segment of the market that I spend any time in, or thinking about. I mean, this market cap is not the pond that I like playing in, as you would know. I would if it had a K instead of an M right behind the 500. But the point being, you can use that framework, I suppose, that we really discussed here today, rock paper stock. So it's like geology, good, paper, they were cash flowing before they suspended operation. Now the money, how long can it sustain them for? Stock, I think the structure is fine. It's generally it looks like a well-run company, so on and so forth. Now, the question is there a valuation mismatch here, or is this really a justified drop in the price? And how you can know that is going to the thing that I said before. Is it unknown? Is it misunderstood? Or is it just a timing that's kind of messing it up? I don't think it's unknown. I think it's a widely talked about stock. Is it misunderstood? Potentially. Don't know it well enough to comment on it. Don't know the situation well enough either. Timing, well, the timing certainly doesn't work. But then you have to ask yourself again, can I afford to be patient here myself? Like, can I afford to take on the opportunity risk? Can I afford to take on any potential dilution? Therefore, can the company afford to sustain that period that I think it's going to take for the situation to get resolved? That's kind of the framework that I'm thinking about when it comes down to how do you resolve this? How do you answer the question, should I buy or should I not buy? Do you think that makes sense?
Yeah, well, in this case, it's for everyone it will be difficult, even someone who knows the company and the management team and everything, because you still don't know how the country situation uh, will be in a half a year from now. But I would be very nervous buying this thing, even if I would know for sure. I know pretty sure that it has a good team, it has a good mind, it has a good project. But the country situation, I have no idea if this valuation is fair or not. And that's why I think not doing something and missing out on a potential re-rate, that I ideally never have fear of missing out. And I would lie if I don't have any. I still feel fear of missing out in things that I know and thought about a lot and then didn't do it, and then it worked out, but I didn't play along. So I still have a level of fear of missing out. I think not having it is way better. In this case, I don't have it at all. I don't know the company that well, and in the past I would have traded these things 10 years ago, but right now I just feel like you can only do whatever you really understand, and that's not this one.
Yeah,
But
again,
I
you
think
have.
it's a good. I think it's a good example, especially because how we opened it. Like a stock going down, buying it is not necessarily being contrarian. It's understanding a situation and then taking advantage of a situation if you really understand it well, and that's difficult here.
Yeah, no, it's a very good example. What else? Do you want to cover
Well,
another example?
yeah, Patriot Battery Metals is another company that I never really investigated in very detail. I missed the lithium boom almost completely. But knowing that this one is probably, I mean, again, I'm not recommending this because I haven't done hours and days of work on this one. But assuming that what I've heard is that this is probably the best nickel or the best lithium discovery in the past years, maybe decade, hard rock discovery. Um, Seeing it go to $18, close to $18, and there was some rumor about takeover, and the company denied it. I mean, maybe it should have been true. Now it is trading at levels where I'm not sure if it's 500 million, where you can really start doing your work. I mean, you have a bit of time. The thing is already going up and I mean, still going up and down. It's not like going sideways like a $5 million stock, but it's going sort of sideways. You have a bit of time, and if you do the work and you think this is going to be, a really good deposit, they have deals with Volkswagen and PowerCo, investments. So this could be that opportunity, buying the best lithium name out there in a bad lithium market. And but you have to think about it a lot. Like, what can I buy it right now? And if lithium remains bad for another 2-3 years, can I hold on to it? Do I think it's worth what is the upside? And is it worth the wait? So this is a bigger company with that potential too, I think.
Hmm.
I'm not gonna say that this is the level to get in or something. This is just an idea, a bigger company idea of a company that suffered from lithium no longer being in favor and the lithium price being down.
That's something that I could have done around 2018 up until 21 really, up until 2020 was doing that with uranium. But again, it's top down that we're talking about here. When you analyze uranium, you're like, oh, uranium is going to go up, therefore I should just buy the best of the best. And I did that first part, got lucky on it, really. I had absolutely no idea what I was doing. Still don't, but got lucky on that first part. Should have just bought Cameco, didn't. I actually went to the very small names and tried to be a contrarian on that as well. And I was like, okay, what is really doing very poorly and is very cheap? And of course, there was a lot of dilution and so on and so forth. So the approach here that you're describing is still top down, which is still something that I don't think necessarily works, or at least not for me. And so, or it hasn't worked for me. So that's what you're describing. And you think lithium is doing not doing well, but you think it's going to start doing well again. Therefore, you buy some of the good deposits. And I understand that argument. It's just not something that I really spend my time on. Again, I go to the rock paper stock. So it's just looking for or trying to be not necessarily a contrarian, but trying to find good opportunities that are missed or just unknown by the market.
Well, Rio Tinto spent billions to buy Arcadium lithium in that same area. So if Rio Tinto thinks that lithium still has a future and spends, I think it was 8 billion, trying to look it up right now, $7 billion, then what could the best deposit in this area be worth trading at 430 million? I mean, now I sound like a promoter, but that should be the starting point of thinking, hey, let me spend some time on this one. Actually, today it's down 4% to $2.80. 438 million market cap. The best deposits in gold and copper and whatever metal you look for have way higher market cap. So the idea, the starting point would be this deposit is worth more than 440 million. And of course, then you have to do a lot of work. And I didn't do that work. So I'm not saying buy this thing. But I do think this could be an opportunity. Timing also very uncertain because maybe they will go through 2 years of sideways or maybe even lower. I do think this is a big company example of potentially being a contrarian play like chemical was, and of course chemical being on another level within uranium, but this is then one of the better deposits, maybe something like NGX in uranium, next gen in uranium.
This right, and for you, for me, it doesn't make sense at this point because what I said at the beginning, which was, you go small sector, segment of that small sector, quarter of that segment, which for me is just not lithium. But if you really know lithium well, this could be an opportunity. But just coming out of it from a completely different angle, like you traded physical tungsten up until now, and now you're like, oh, I want to do lithium and do this best deposit. I think that can be a recipe for disaster relatively quickly. So I think that's it. Do you want to do another example?
Yeah, let's do another one. A little bit in the same theme as Highlander Silver. Maybe the team is not like, I mean, it's not like Richard Borg, but it is a little bit similar in a way that it's S2 minerals. This is a spin out of G2 Goldfields, which is very successful right now. I think it's even approaching $1 billion. I mean, the neighbor of Reunion and G Mining right now. So they spun out this company because this was originally the main project. Sandy Lake has some amazing drill intercepts. It's a little bit like Red Lake, so maybe not completely consistent and continuous, but they have hits like 8 meters of 35 grams. Have some problems, I think, with the First Nations. So there's things to solve. But at a market cap of, I don't have the market cap here, but I think it's probably 4 or 5 million. Let me have a look. It is 5 million. It was trading at 2 or 3 million for a while. I thought about this one quite long and also didn't take action, to be honest. But this is one where Pat Sheridan owns 3.3 million shares of the 9 insiders who own pretty significant chunks of the stock. And then you have some followers, of course. They have a bit of a network, so they have funds and friends who also own stock. I don't know exactly how much, but I just know that it's well followed. And nothing has happened. It's a very boring stock. And this could be one. It wouldn't surprise me that this one will do well one day. And is it going to be with this project? It is like I said before. I mean, it could be the catalyst could be Sandy Lake having an agreement with locals and start drilling it again. Could be a catalyst. Catalyst could be new project. So there's several outcomes here. But I think one day something will happen with this company. It's almost like buying a shell. But it's a little bit like Highlander. Highlander didn't have a lot of direction and leadership for a while, for 2 years, until it did get some leadership again. And right now this one is similar.
Easy there in the prediction. Something will happen someday. I like that prediction. I'd make that prediction any day. I think I want to confirm that.
I think the reason why people would not buy it because they feel nothing's happening. And nothing may happen in the next 6 months, and nothing may happen in the next 12 months, and maybe even the 24 months. So I think it's actually the problem for people. It is too boring. Nothing is happening. And I think that something will happen in the future, and probably something positive, because how can it be negative? Even if they lose, if they would lose Sandy Lake completely and they have nothing and it's just a shell, well, maybe it goes back to $3 million market cap again. So I wouldn't, put your complete mortgage into this thing, but it is, I think, an opportunity. And of course, one that already moved a little bit. I like to be, this traded for a year around 15 cents. If you include the recent rollback, paying 27 cents right now is already, almost a double. And that's not something I like because nothing changed in the meantime. So I think it's important to be cheap and try to find the absolute bottom or maybe be willing to buy more if the thing goes down again. Because I think $5 million could be an amazing opportunity, but of course 3 million would have been the better one. And it could take a long time. So you want to buy something, forget about it. Well, not forget, but sort of forget about it. Not think about it every day, because if you do it, then you will get depressed.
Local Dutchman thinks it's important to be cheap.
Yeah.
I like it. Your camera has lost your focus again, which is always a sign for us to stop talking and go about our day so that we don't get depressed. Was that it? Is this the pod?
Yeah, I think so. I think there's a couple of other examples that I took with me. I can mention them, and maybe you can show them quickly on the screen. And
Sure.
my work wasn't for no reason, but again, I want to emphasize these are not recommendations, but ideas that I like. Some of them I own. Copper Standard, and again, I'm not saying these names because I get a fee or I have I do have relationships with some of these companies, but just relationships in the sense that I call them every month or every couple of months to get an update. But there's no other interest for me to sort of push these things. Level 14 became Copper Standard. I think it's a good group of people. I don't love the deposit. They assembled a really good team, got all kinds of experience in it. Insiders own a lot, and I think it's a number of catalysts could happen without knowing when. But I do think at this level right now, 35 cents, it's cheaper than almost anyone could have bought it. Even I think the seed round is probably go to the prospectus and look what the insiders paid for it in the very first round. I don't really remember right now, but I think this is probably a pretty good entry. But again, I'm not recommending it. It's an idea. And then Fuerte is a PS Lassonde stock. Again, I don't love the project. It's pretty okay, but not amazing. They have a riskier porphyry bet in it as well. Um, but um, but I'm thinking that they will buy a new project, and it can take a long time because finding a good project takes time. But Pierre Lassonde and his people are behind this, and I think the moment they find something of interest, then the name will be well known. Not right now. And well, then there's a little bit more obscure ones like Conquest. Tom Abramovich is involved in this. I was thinking maybe this could be the go public vehicle of this Kinoland deal that was recently done with Auronova.
Yeah.
So in a way, it makes sense because it's a cheap listing. They have cash in the bank, a little bit cash in the bank, and it may be the cheapest way for them to go public in a company that they already have a level of control over. But maybe it's conflict of interest. So I wouldn't just buy it for that reason, but I would call them first before you consider this. And I think that's it. I think most of the other ones have been discussed before.
All right, that's it. That's the pod. See you next week. And thank you to everyone for listening and watching. This was an interesting conversation. Any and all questions for future interviews are, of course, welcome. Please post them in the comments. But I am still going to kind of repeat the warning that I said at the beginning, that everything, everything combined with the warning that I gave you at the beginning is to say that you should treat this program as biased entertainment instead of unbiased journalism, because there will always be some type of bias in what everyone tells you online. They may own shares of the company, they may be a director, they may have been paid by the company, and so on and so forth. Now, this entertainment program specifically is intended only for experienced junior mining speculators because mineral exploration, development, and mining is a very tough business. Losing money is the norm and should be the expectation, as this is a very complex sector, and the performance of individual companies typically depends on many different things, including geopolitics, macroeconomics, commodity prices, and many other moving particles that are typically outside of anybody's control, and no one can really proceed him, because unfortunately, and believe me, I have tried and I might even keep trying, though I doubt I'll ever be successful. I just don't possess any superior knowledge about the potential direction of any stock or commodity price. And at least to my understanding, nobody out there does. So you should not rely on this program for directional advice or advice of any sorts, as this was a conversation that was general and impersonal in nature between a couple of individuals, none of whom are your licensed financial advisor and none of whom can see the future. So no guarantees can be made about future events, and past performance is not a guarantee of future results. So please talk to a professional licensed investment advisor with a good long-term track record, as well as do more research before taking any decisions by visiting setterplus.com, where you'll find the official filings of the companies that might have been discussed in here today. And if you don't do that, you're highly likely to lose your money. There's a couple of documents that are absolutely obligatory reading for people interested in the space. And that is, of course, the MD&A, which is the Management Discussion and Analysis. And it's an official document that the company publishes on setterplus.ca. You want to look at the financial statements of any company and understand how and why and where they spend money. And you also want to look at the management information circular, which is going to tell you how much money each insider of a company earns in total compensation, bonuses, and everything, and all the other incentives that they might have. It's also going to show you if there are any change of control fees and whatnot. It's a very important document. And then, of course, this is a technically focused business. So you also want to read the NI 43-101 technical disclosure. And again, if you don't understand it, consult with someone who does understand these things. Because if you don't do that, you are highly likely to lose your money. So, yes, thank you so much for listening to this. And I'll leave you with one of my favorite Charlie Munger quotes, which was, if you don't understand it, don't do it.